Starting a mortgage business can be an exciting endeavor and offers many potential opportunities for success. To get your business off the ground, there are a few steps that need to be taken. This video will provide an overview of the essential steps you need to take in order to start a mortgage business. Learn your state's rules. When starting a mortgage business, it is important to learn your state's rules so that you can ensure that you are operating within the law and not putting yourself at risk for legal repercussions. Each state has its own set of rules and regulations when it comes to mortgages, and understanding them is essential for any business owner. Knowing what is required of you will help you stay compliant with the law and protect your interests. Here are some of the basics for mortgage licensing in each state. Alabama, the credit reporting agency must be on file with the Alabama Department of Banking. Alaska, to be able to work as a mortgage broker, an individual must have a current license issued by the Department of Commerce, Community, and Economic Development. A licensed broker may not act as a loan officer. Arizona, as long as an individual is 18 years old, they may apply for and obtain a license as either a mortgage lender or mortgage originator without any additional requirements. States that require anyone over 18 to have a license may not allow an individual to operate as a mortgage lender or originator unless the individual is licensed by that state. Nevada, a person shall be qualified to become licensed if at least 18 years old, has not been convicted of any felony other than those related to the criminal use of controlled substances, and has completed at least 1 year of education at an accredited college or university within the previous 3 years. Ultimately, this is one of the most important steps in starting a mortgage business. Apply to NMLS. Starting a mortgage business requires a great deal of knowledge and experience. To ensure that everyone is well informed and acting in the best interests of their clients, it is important to become licensed with the Nationwide Multi-State Licensing System, NMLS. The NMLS provides a standardized licensing process for all states and territories, which helps to protect consumers by ensuring that all mortgage businesses operate according to the same standards. Applying for an NMLS license can also provide credibility to your business, as it demonstrates your commitment to upholding the highest professional standards. National Mortgage Licensing System (NMLS). Applying for a mortgage license is not an easy process, and it requires a great deal of effort. To meet these challenges, your application should be made with the assistance of a licensed CPA. Your CPA can help you prepare the necessary documents, review the application for compliance with regulations, assist in obtaining the required supporting documents, and ensure that your business operates according to industry standards. Apply for a state license. Starting a mortgage business requires you to have a state license. This is an important step in the process of starting and running your own business. It ensures that you are up to date with regulations, standards, and laws related to the mortgage industry in your state. Applying for a state license gives you the credibility and legal protection that comes with being properly licensed. Furthermore, the process of applying for a state license establishes trust between you and your customers, as they know that their transactions are legitimate. Licensing requirements. The first step to starting a mortgage business is applying for a license. To start a business, you must be licensed in your state as an individual or as an entity. As an individual, you have to have a Social Security number, SSN, and complete the following. Fill out the affidavit for formation of a corporation to the Secretary of State. Get a tax identification number from your local IRS office. Submit an employer identification number from your local IRS office and federal employer identification number, FIN, from the IRS. File a certificate of good standing with your state department or bureau related to business licenses. Submit 3 pieces of identification. 2 must be recent. 1 item is sufficient if you have had no negative information on file with your state for 5 years before filing an application. The other 2 must be a photo ID and one of the following items: Social Security card, U.S. passport, military identification card. You will need to complete a sponsor's affidavit which is filed with the Secretary of State, and serve it on any other entity in control, i.e., your partner, in order to transfer assets. File articles of incorporation. With the Secretary of State Office, submit articles of incorporation and copy to IRS. Submit articles of incorporation with completed paperwork attached to IRS after meeting all requirements in addition to the normal requirements for getting started. Maintain your license. A mortgage business can be challenging and complex. It is essential to maintain your license when entering the mortgage industry, as it ensures that you are compliant with all state and federal regulations. Furthermore, it also shows potential clients that you have taken the time to educate yourself in the appropriate laws, regulations, and procedures related to the mortgage industry. This helps to build trust with clients and attract more business. Maintaining your license is essential for any successful mortgage business and should not be overlooked. The mortgage industry is highly regulated, and it is important to maintain your license. Take the time to educate yourself on how licensing requirements work in your state. Different states have different laws and regulations, which may vary based on the type of mortgage business being run. This can make establishing licensing requirements very difficult. The license typically provides protection for clients who use your services with regard to mortgage fraud and predatory lending practices. It also helps to protect lenders that are operating in the state from frivolous lawsuits filed by borrowers who have rejected or charged a higher interest rate than is legally allowed by law. This allows lenders to operate with peace of mind and gain confidence in their business decisions so that they can continue to provide affordable credit to borrowers. Banks and other lenders need to be able to make lending decisions without fear of costly litigation, said Tom D'Acuxioletta, Chief Counsel for the New Jersey Department of Banking and Insurance. This law provides companies the certainty that they will not be subject to frivolous lawsuits in which borrowers are seeking unjustified compensation or fees from lenders. Now that we have talked about what things you need to do when starting a mortgage business, it's time that we talk about the things you need to do during the initial stages of your business. Decide what kinds of mortgages you want to specialize in. Starting a mortgage business can be a complex and daunting task. It's important to decide which types of mortgages you want to specialize in so that you can focus your efforts on the areas that will make the most impact on your business. There are a variety of mortgage options available, from fixed-rate and adjustable-rate mortgages to jumbo loans, balloon payments, and FHA loans. When deciding what kind of mortgages you want to specialize in, it is important to consider factors such as loan terms and rates, borrower eligibility requirements, lender guidelines and regulations, and other details related to the types of mortgages you plan on offering. With careful research and planning ahead of time, you can ensure your business offers the best services for your clients' needs, as well as others, meaning that there is no one-size-fits-all solution. There is also often a wide range of lenders in this space, which means you'll need to research your options thoroughly before choosing a lender or opening up your business. When considering whether or not the mortgage subprime lending market is a market filled with opportunities for small business owners, it can be hard to find the right approach if you're new to the industry. There are many different types of loans and terms that are available in this market. Create your business plan. Starting a mortgage business requires an in-depth understanding of the industry, the local market, and the strategies to make your business stand out from the competition. A well-crafted business plan is essential to ensure that you have all your ducks in a row when you are starting out. It is important to create your business plan as it helps you identify potential obstacles and develop strategies to overcome them. It also gives potential investors confidence that they are investing in a sound venture. Additionally, it can help you secure financing and attract talented employees who share your vision. By creating a comprehensive yet concise business plan, you can ensure that your mortgage business has everything it needs to succeed. To start, you should have a list of the resources that are needed to get your business up and running. This includes the amount of money you need to invest, the number of employees you will need, the location of your office or storefront, and so on. One idea is to write down where those resources will come from: funders like a bank or private investors, workers such as staff members and contractors, investors like shareholders and partners in the business, physical assets such as desks and computers, etc. You can also ask yourself what role each of these types of resources play within your company. Obtain office space. When starting a mortgage business, it is important to obtain office space for a number of reasons. An office space provides essential privacy for conducting confidential and sensitive business activities, such as handling customers' personal information. It also presents an opportunity to project a professional image that will inspire consumer confidence in your company. Furthermore, having an office space allows you to meet clients face-to-face and build relationships with them that can last for years. Finding an office space for a new mortgage company can be difficult. Some of the ways to find office space are: there are many factors that determine whether or not a landlord will rent to an applicant, some of which include location. Is the office close enough to potential customers? Does it have easy access for your employees? The number of employees. Does the landlord want you to fill up their vacant spaces quickly, or do they want you to find your own space before leasing? Is there any occupancy limit on the available square footage? The lease term. How much time does the landlord have to fill up their empty space? Is there a strict no pet policy, free food options, or limited office space? The process of renting an office from a company typically goes something like this: wasting too much time on the process, or not having a strict lease agreement with your landlord. As a result, you may not see the office space that you want and need. Is there an option to renew or extend the lease? The legal term for this is tenant's right of first refusal. This means that if someone else is willing to pay more than what's negotiated in the lease agreement, they have first dibs on it. Thank you for watching.